Hello and welcome back to Market Ways, guys. Today is the second episode of ICT Pyramid where we are going to discuss about the inefficiencies. Alright, now what is an inefficiency? The three consecutive candles. Now this is the bullish example. Alright, the three consecutive candle. This is your first candle, this is your second candle, and this is your third candle. Now the gap between these two candles is your FVG or inefficiency, or whatever people say. Alright, this is your fair value gap. What market do is, once market create these inefficiencies, market came back to fill this inefficiency and then move toward the true direction. Now this is the bullish case scenario, and I'm going to tell you about the bearish scenario. When market is moving toward the downside and you see the three consecutive candle pattern the same way, one, you're gonna take the low of first candle and then you're gonna take the high of next candle. Between these two candles you're gonna see a gap. That is your bearish fair value gap. And the same thing, market will came into this inefficiency and fill this inefficiency, and it's gonna move toward the true direction. Now let's move towards some real life examples. Now here is the very first example. This is the inefficiency. Now let me clear, this is your FVG and this candle also have your FVG. This is your FVG. Let me mark that as well so that you don't get confused. Now this is your FVG. What happened? The first candle, alright, and this third candle, you can see there's a gap. There is no wick aligning with each other. There's just pure gap between this wick and this wick. This is your fair value gap. And if you see, yeah, like here, now this is not your FVG, because the reason is quite simple. This is not your FVG because the wick of the first candle and the wick of the second candle is combining. Alright, so this is not your FVG. The gap between the first candle and the second candle, they should not collide or combine or anything like that. The gap between them is your FVG. What market do? Market came back to inefficiency, tab into this, and simply went toward the buy side. This is the clear example. Now let me find a bearish example. Yeah, so we got this bearish example. You got the first candle over here. This is your first candle. This is your second candle. You got the huge difference between the first and second candle. So this is your bearish FVG. You can see market came back, tab into this, and simply went toward the downside. Now these are the bullish FVGs, and these are the now this is the bearish FVG and this is the bullish FVG. I'm gonna explain that in future, that which FVG works. For now you just have to understand what is FVG. Alright, so the gap between three consecutive candles is your FVG. Now this is your bearish FVG and this is your bullish FVG. Alright, so that's it for the day. Have a good day and please do subscribe for the more videos.